Let's do our calls of the day now. First up is FedEx got downgraded today to neutral from buy at Citi. They named J.B. Hunt and UPS their top picks, which, Joe, both are in the Joe T.
They are, and it's really the logistic thesis, the movement of goods, the resiliency of the consumer within the economy. This is going to sound like a lukewarm endorsement, but that's kind of the best I'm going to give you. We're going to need more. These are two companies that, again, I like the balance sheet. I like the fundamental nature of these companies, but you need a better overall macro environment. You're getting a little bit of that with J.B. Hunt. With better gasoline prices, we're going to need more. We're going to need an improvement. Expectations for this, I think you have to set them very reasonably at a modest level.
How about that, Steph, for rails, all transports?
Yeah.
Do you need a better macro for these stocks to work better?
Probably. You probably do. But I own Union Pacific because it's the #1 company in the industry. They benefit from crude by rail, which is a very big theme and a very big positive for them. And they've been fixing some of the problems, the service problems that they've had over the last couple of quarters. So that should help operating ratios and the margins and that sort of thing. And they have very easy comparisons in the next several quarters. The stock is not a commanding multiple, so I'm very specialized within transports. And I think that there's enough here fundamentally that gives me confidence that earnings will hold up relatively better than some of these other.
Technically, the rails actually look better than any other subset of the transports. And 1 out of 4 freight companies are now below their 200-day moving average. EXPD, FedEx, J.B. Hunt, C.H. Robinson. These stocks do not look good.
Carrie, you own a company named Wabtec.
Yeah. And we bought it over a year ago. It was trading at a sharp discount to the market. It's gotten some big orders from many of the larger railroad companies. They make cars, and they make equipment for cars, they make rail tracks, and it continues to be a good performer, we believe, because it's got a really nice runway and bookings are fantastic over the next couple of years.
So the other call that I wanted to hit, Josh, is a stock that we just haven't talked a ton about, is Amazon. We end up talking about Apple a lot for obvious reasons, but J.P. Morgan reiterates Amazon today. Their top pick, 185 is the price target. You own it. It's pacing for its 6th negative day in the last 7.
Yeah, so I'll take 185. This is interesting. This is one of those situations where there were a lot of reasons for it to have had the big bounce, and they just haven't worked out. The latest, of course, being the split. As ridiculous as it sounds, these splits have ended up being big catalysts for some very large stocks. Tesla is a recent example. Apple before that. Amazon did the split. There was some excitement when they announced it. The problem is, by the time it took place, all of these stocks were locked into this massive downtrend. So they really just didn't see that bounce that you would expect. So then you say to yourself, like, well, what's the next real catalyst for Amazon?
I was writing that down, right, literally as you were saying it. What's the bullish catalyst?
I feel like you and I are almost like we share one brain sometimes.
For real, though, what is it?
There isn't. So the answer is that there isn't one.
And does it bother you that 97% of the sell side have buys on this thing?
I feel like that's been the case, though, since like 2016, right?
Yeah, but I mean,
it's never been a hated stock.
You don't have an incremental upgrade coming. That's my point.
Yeah, you know what might be a catalyst. The only thing I can really think of is some sort of spin-off. But I don't think that the new CEO has the ability to just decide that they want to do that without input from Bezos. And Bezos is having way too much fun these days. All you have to do is follow TMZ to understand why you're probably not going to get that kind of a transaction that would really introduce some excitement into the stock. But like AWS is a standalone stock. This thing could go up 20% on that news. I just don't think it's going to happen right now.
Scott, Joe. What about buybacks like Alpha? What about ask Josh? What about buybacks like Alphabet did a couple of years ago to kind of mimic what Microsoft and Apple were doing?
It'd be great. Historically, they've been pretty hesitant. They've done some in recent years. It's such a tiny amount. It doesn't really seem to move the needle. and it's hard to picture them going from 0 to 60 and doing a big enough buyback that it would really be meaningful. The way a company like this probably would approach a buyback is the way other companies would approach a dividend. They never start out with a 4% yield. It takes them years and years of 5-cent increases to finally get up to an appreciative dividend. I kind of feel like Amazon would be that way about any kind of large shareholder return because, again, the overarching ethos of this company is that it's day zero, meaning they always want to act as though it's their first day in business. It's hard for a company that starts out their first day in business to say there's nothing better for us to invest in other than buying back our own stock. So it may get there at some point. I don't really foresee this as being a buyback or a dividend aristocrat anytime soon.